Hello viewers, in this video I'm going to show you how to prepare the income statement of Hope Limited, and let's look at the requirement. It says that prepare the net cash flow from operating activities starting with profit before tax, and state the cash flow statement of cash flow for the year ended 31st of July 2006. So the first thing I'm going to do is draw the format. Cash flow statement of Hope Limited for the year ended 31st of July 2006. Cash flow from operating activities. Be my first heading. Profit before tax. Remember, the three headings are cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. So I can write them down here. Further down, I'll write cash flow from financing activities. And then I'll write cash Before that, I'm going to write any increase or decrease in cash and cash equivalent. Increase, decrease in cash / cash equivalent. And then cash equivalent, the beginning. The end of the year. So here's my standard format. Now cash flow from operating activities. But before tax, I'll start with before tax. Question, it is 4,097. Next, I will have add any depreciation. In the question, I have been told that the depreciation is 3000 3020 3233. This will increase my profit, so that's why I've written add. Next, I have, because I have taken profit before tax, so this so the effect of interest is included in this 4097. So I need to record finance cost, add finance cost. If I would have started my question with profit from operations, then I would not have taken the finance cost. And the finance cost is 941. There is no gain or loss on disposal. Therefore, let's move on to our inventory. There you can see there's an increase in inventory, receivables are increasing, and let's look at payables. The payables are also increasing. So I can write the headings here. Increase in inventory, increase in receivables, increase in payables. I've just shown you the figures in the statement of financial position, so I'm going to write the figures over here: 804, 526 and 819. Now adding 3233, 941 minus 804 minus 526 plus 819 is equals to 3663, and that is cash flow from operating activities. Then I am going to write less interest paid, and then I'm going to write the tax paid. Now the interest paid is, there's no opening balance of interest payable, no closing balance of interest payable. Therefore, whatever the interest has been charged in the income statement is the same as what has been paid, 941. Looking at the tax figures, you can see this is the tax that has been recorded as an expense. Let's check the liabilities if there is an opening and closing balance. Yes, there is an opening balance and there is a closing balance of tax. Therefore, I need to open a T account to find out how much tax has been paid. Not charged in the income statement, but paid. So the opening balance of the tax is 1145 because it's a liability. Therefore, the balance will appear on the credit side. The opening balance will be on the credit side. The closing balance is 1349. In the income statement, as you can see, 1349 has been recorded. Two, 494 2494, and out of the bank account 1145 has been paid. So what I've done is I have added these two figures because they were the heavier side in the T account. The credit side was heavier. I've written the total here. I've copied the total here, subtracted 1349, and I got 1145, and that's the amount that has been paid. 1145. So you can see I've written tax paid, interest paid. So now 3663 minus 941 minus 1145 gives me the total, which is 1577. If I add 4097 and 1577, that will be my cash flow from net cash flow. Net cash flow from, sorry, I need to write one more line, which is, so I'm going to move this down and I'll write net cash flow from operating activities. 5, 6, 7, 4. Next is cash flow from investing activities. We need to find out if we have bought any non-current asset or disposed of any non-current asset. Similarly, in the investing activities, we also record if we have any dividend received. But if you look at the question, it says that no non-current assets were sold during the year. So now looking at the non-current asset figures, you can see that non-current assets figure has increased, and there has been depreciation as well, which was 3033. So the opening balance is reduced by the depreciation, and therefore we should have a lower figure of non-current assets. But the non-current assets have gone up, which indicates that there has been a purchase of non-current asset. So let's open a T account over here. Current asset. Because it's an asset account, therefore the opening balance will be on the debit side, 16154. The depreciation will be on the credit side, 3233. I'm getting all these figures from the statement of financial position and the income statement, which I have shown you already. And the closing balance of the non-current asset will be 16842. Now if I close this account, so the total is 20,075 minus 16154, and I will get 3541, which is the money paid out of the bank account. So you can see non-current asset is debit because of bank. So non-current asset is debit and bank is credit. 3541. Therefore, I need to record here purchase of current asset. I should name it as working number 1 and working number 2, and I should give reference working number 1 and working number 2. 3541, and then I have to write cash flow from investing activities, that is 3, 5. So I have written brackets around it because this is the money gone out when we bought some new assets. So money has gone out of the business. So remember that there are 3 main headings: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. You can also highlight them. Right. Talking about financing activity, how did I finance my business? Did I sell any new shares or did I buy my shares back? How did I finance my business? Did I take any loan or did I pay the loan back? And the third thing that appears in our financing activities heading is dividend received. If my company has invested in any other company, my company must receive a dividend, which needs to be recorded in financing activities. Now looking at the loan, you can see that the loan figure has gone up. So we received a loan, receipt of loan. So you can find the difference. I have just shown you the figures in the statement of financial position, and that is 960. So when we receive loan money, the cash balance goes up, which is good for the cash flow. Now let's look at the share capital in this company. The share capital has gone up and the premium has also gone up. Therefore, we need to record issue of shares. We do not call it sale of share. We record it as issue of shares. Issue means selling. So it's a accounting term, issue of shares. So 7,200 with the premium. In other words, you can say that premium is the profit on that share. Not exactly the profit, but just to make you understand, that is an additional price we pay to buy a share, and that is called premium. So 7,200 plus 960 minus 6,000 minus 240, and the total figure is 1920. Because I'm issuing shares, I'm selling, so cash is coming in, which is good for the business. Now I need to write net cash flow, net from financing activities. The total is 2880. Now let's draw the line. Now I have figures over here. I have already added 4,097 plus 1577, and the total is 5674. I should then subtract 3541 and add 2880, and the total is 5013. That is this figure plus this, this figure minus this plus this. Now that is an increase in the cash and cash equivalent. Next thing I need to write is what is my cash at the beginning. So you can see in the question, the cash or cash equivalent at the beginning was 358, and if I add these two figures together, that will be 5371. That is cash, cash equivalent, at the end of the year. So your final figure, which is cash and cash equivalent at the end of the year, should match with this closing balance of cash in the statement of financial position. I hope you found this video useful. Thank you.